Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today's the 31st of January, 2024. So, yeah, welcome, everyone. Welcome to this last trading session of this month. Yep, so we are done with the first month of this year. Passed very quickly, I think. I don't know, for you, let me know. Let me know how it went for you guys. Put it in the chat room there. Oh, by the way, before actually I go further, any further, as always, I keep on forgetting to put good morning to everyone in the chat box. So yep, good morning, everyone, guys. Like I said, welcome to this Wednesday session where we're gonna have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, yep, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear from that little left corner and I'll be back in a bit. Okay, so now then, guys, also just before we jump into the charts, just a quick mentioning of our Easy Markets website, which you can always check out for more information about it. If you have any questions, you can always reach out to us. Yep, and I hope we can answer all your questions. If we cannot, we'll try to guide you to the right place. But anyway, guys, looking at the chart right now here, let's, as always, the first one I want to pick up here is Nikkei 225. And yes, we are pushing back up. We're trying to climb higher. Again, I said to you that today is a special day. And look, I mean, we do have the Fed. Just bear with me one moment. Just trying to see if actually is everybody's tuning in okay. Can everybody hear me and see me fine? Because I mean, I'm trying to see if this is actually working. Um, yes, guys, I hope everything's doing okay on your side. But yeah, just a quick shout out, guys. I mean, if you're here, if you can hear me well, then yeah, just let me know. But look, coming back to this, so the chart here, Nikkei 225 pushed nicely to the upside. After kind of it went lower, it found, as we can see here right now, it found good support. Let me just grab a line here. It found good support around here. Let me just adjust this very quickly as I like it. Near the 35,700 zone. So, you know what I really want to do? I want to get rid of the Fibonacci. Tomo, Finland. Everything looks and sounds good. Thank you very much. Thank you very much for confirming. Really appreciate that. Correct me if I'm wrong. Judging from your kind of nickname here, I mean, are you from Finland? I mean, that would be a surprise, but judging from the nickname. But anyway, let me know if you are actually from Finland, just out of curiosity, because like I said, I'm asking people where are they from, so that they could put it in the chat room there, because I want to understand my demographics here, who's watching me. So at the moment, I have people from different continents. So yeah, and this is why, I mean, the time is like really interesting for me. I mean, if this is still good, so because if there are more people watching, let's say from a certain region, then maybe I should switch my time a little bit to a different one. But yeah, correct. Woohoo! Yes, fantastic. So yes, guys. So coming back to this situation here, Nikkei 225, we're pushing back up. We found good support near the 35,700 zone. So in a way, I really want to get rid of this Fibonacci extension. I think that it's no longer needed, and we can just focus on the this hurdle, this 35,700 zone, and if we can get a nice drop below that, my next target will be the 50-day EMA, and then we'll just kind of take it from there. We'll see if we want to go lower or not, and so on and so on. Hitchcock's G, South Africa. Okay, nice. Okay, cool. No, really, really cool, because I have one from Europe, I have one from Africa. Do I have anybody from maybe North or South America and Asia and Australia? Yes, I mean, if somebody's out there, let me know. Because then, I mean, so basically, if during this webinar, I'll hit the, if it doesn't matter if you're watching live or recorded session, just let me know. If now I need a person from North America, South America, and one person from Asia, and one person from Australia. And I mean, okay, I'm not going for Antarctica, but it's okay. I'll manage without that one, but in general, yes, let me know. So coming back to this situation here. So yes, morning, Agomez. Hi, morning. Good morning. Happy to see you here as well. Thank you for yesterday's comments and stuff. So yes, thank you. So coming back to the Nikkei, 36,425 territory, something around here. I'm keeping still an eye on that one in order for me to go higher. Look, I said to you previously that I will get a little bit more excited with the upside if we start already pushing the 36,278 territory. That's great, wonderful. And now, I mean, let's see if we can clear that one, because that one acted as a good area of support and resistance. So at the same time, so yes, if we can clear that, wonderful. I'll go a little bit more to the upside. Today we got some data from Japan, by the way. So industrial production, preliminary industrial production month-on-month for December went down. It came out higher than the previous, of course, but still came out lower than the forecast. So I think that that's still okay for the market, and yes, we're seeing a push higher. But apart from that, I mean, retail sales figures, okay, Japanese retail sales figures disappointed a little bit. So, maybe this could be seen as a positive. Why? I mean, in the near term, why? My logic is this. Maybe I'm wrong, but my logic is this. We recently started getting reports about like some, big fish, and Japanese big fish, basically saying that, the Bank of Japan needs to end its kind of this easing, this super strong easing. I mean, these lower interest rates, they need to kind of finish with that program, and they need to start looking into hiking rates, which would be a little bit of a bad thing for the stock market, for the indices, and we could see a drift lower. But the fact that retail sales went lower, that means people are not spending that much. So in a way, you kind of need to continue stimulating the economy. So yeah, that's why they're seeing this as a positive, and the stock market is kind of pushing a little bit higher. So like, kind of bad news is good news, But anyway, from the technical perspective, that's my game plan right now. I'm watching the fact that we've climbed above the 36,278. That's great. My next target is the 36,425. If that gets cleared, I'll go further north. For the downside, and you see a drop below the 35,700 zone, and then we'll go from there. ASX 200. So boom, look at this animal. We pushed strongly to the upside and nicely to the upside, and yes, we reached my target. So my target was the 7,600, which we reached yesterday, and then we declined, but then we still remained above this territory, this highlighted zone. And I talked about this yesterday. I said that if we continue to trade above this hurdle, yes, I'll go again for that 7,600 zone, or maybe even this higher level, which is, let me just grab a line here. Maybe let me recycle one of these lines here. Always recycle, guys. So 7,622 territory. We got a nice clearance of that. This confirmed the forthcoming higher high, a new high for this year. Let's see if we can stay above that hurdle. If we can, great. I will go further north. However, I have to mention the same thing, which I didn't mention with Nikkei and ASX 200, that Today is a special day, so we got the Fed. So I'll get to the Fed in a bit when I'll jump into U.S. indices. But in general, be cautious with this, because these are the futures I'm talking about here all the time. So if the stock market, if the U.S. stock market starts drifting heavily to the downside, then well, we could see, these guys as well, moving nicely to the downside. So it's like I said, it's all connected, and let's see if that's gonna happen or not. And China 50. So I look, honestly, look at how well this 11,000 mark is holding. I mean, I keep on talking about this, I keep on mentioning this. So I mean, what else can I say? I can only say that yes, so far I'm still keeping an eye on that 11,000 mark. So if I can get that drop, wonderful. I'll go lower. If I can get that drop, wonderful. Yes, I will go lower. I will go further south. But at the moment, we're getting a hold up. So I'm just observing the price action, because my upside scenario only is from this break of this downside line, the upper side of the falling channel, and the break of this 50-day EMA could do the trick for a few more buyers here. And then, yeah, we could take it from there. So long story short, for now, I'm cautiously bearish, maybe even actually more bearish than bullish. But I need that confirmation break below the 11,000 mark. Just bear with me one moment, guys. I need to do here something. Let me just post this this webinar right now in a group, so that people would be aware that this is happening right now. So yes, just bear with me one moment, guys. I mean, like I said, I'll do this very quickly. Something that, kind of helps me to raise awareness that, such an event is happening. But yeah, okay, the last one, and that's it. So anyway, guys, so coming back to this, like I said, these indices here, again, the China situation. Look, not everything is perfect in China right now. I mean, especially with the housing market, construction, housing construction. But one man, as I like to say, one man's loss is another man's gain. So, as I said to you yesterday as well, that maybe allowing Evergrande to fail, you will allocate more governmental money towards other builders. Again, theory, idea, I don't know, maybe I'm wrong, but yeah, just kind of, throwing it out there. Maybe it could be the case. So maybe not, maybe this will stabilize and everything will be fine and nice and dandy again. So coming back to the US indices, look, this one is performing quite well. Yesterday, the Dow showed good strength. We saw a push higher. Dow ended, like, during the main trading session, Dow managed to gain 0.35%. Guess which index was the biggest loser in that case? I mean, of course, it's Nasdaq. Because again, as I mentioned before, if it's Nasdaq winning, then Dow is the loser. If Dow winning, Nasdaq is the loser for that day. And S&P is somewhere like a ref in between them. So as I keep on saying, I like to call it the average between the two. But anyway, yes, yesterday Dow was a great performer, top performer. Yes, we saw some good results here, but of course, we will, we'll watch today's event, today's Fed. Oh, and by the way, and speaking of top performance, we just hit kind of the major milestone, and I'm excited to share with you all that Easy Markets has been honored with the best Forex broker award on TradingView Broker Awards. So yes, great. This award really kind of reflects the strength and the dedication of our community, or of trading champions. It's kind of you, the traders, who make our platform stand out. So a heartfelt thank you to all of you for trusting us with your trading journey. So yeah, remember, if it's your consistent support and kind of feedback that helps us innovate and improve our services every day. So recognitions like these, like this, reminds us why we're here. yeah, so we're kind of, I think we're doing a good job. I hope we're doing a good job. So to offer you the best trading experience. So with the latest win, I mean, rest assured, we'll keep working hard to enhance your trading experience and pushing the boundaries to provide you with the top-notch resources, insights. So let's continue striving for excellence together. And yeah, so but anyway, let's go back to the indices here. Look, so yeah, look, Dow Jones Industrial Average. Today we have the Fed. The Fed, I think that everybody will be watching the Fed in terms of trying to figure out, will there be a rate hike or not, or will there be a cut? No, not about that. So basically, the hike at the moment, yes, it's not going to happen. So I mean, looking at the Fed Watch tool, what we see here is 97.9%. I don't know why they're still keeping it at a 2.1 chance of seeing a cut, but anyway, maybe they have to, because nothing in this life is 100%. But anyway, so this situation here, like I said, the Fed is now discussing the option of, let's say, will we see a rate cut or not? Like, and actually, okay, the other question is that how many rate cuts are we going to see? And if you remember, I kept on talking about this from like the end of last year, since like the last meeting in December the 13th, if I'm not mistaken. I said to you that the idea that they threw out there, that they're gonna do 3 rate cuts by like mid 2024, that was like a special tool for them that they've created themselves for themselves, in order to kind of control the stock market. So for example, if the stock market rallies too much, they say that, you know what, we're gonna do only 2, maybe even 1 rate cut. If the stock market starts correcting back down, they say, you know what, we actually might do the 3 cuts, and then the stock market pushes higher again. So it's you manage to create yourself a tool without doing anything, without neither cutting or physically actually cutting or raising. You can control the stock market. So that's amazing. That's beautiful. And now everybody's going to be watching. Will there be like 3 cuts? Or actually, will they hint that there are going to be only 2 cuts? So that's what the stock market, if by any chance they start saying, you know what, we're going to stick with the 3 rate cuts. And if that's the case, then that means that that's going to be March, May, and June. That's so basically the next 3 meetings, they will just have to cut a rate. So that's what I'm saying. So that's what you need to keep in mind. So today, yes, nothing, no action taken, but of course we will all listen to how they will speak, what's going to be the tone, and will they say, actually, you know what, we think that 2 cuts are enough. If that's what they say, like 2 cuts are enough to support the economy right now, or in that context, then we could see the stock market actually drifting lower. So again, something for you to keep in mind. Again, check the economic calendar to see when that event is coming out in your region at what time. So just be careful during those times. Although it could present itself with a nice opportunity to trade because of the increased volatility, but at the same time, it can take you out if you don't have enough funds. So just kind of weigh your risk accordingly. And yeah, it's kind of I call it a gambling moment, but the whole thing is a gambling thing here, whole trading experience. But anyway, so from the technical perspective, as if we would leave everything as it is right now, as long as we stay above the 38,500 zone, which we yesterday cleared, and I talked about this level. If you remember, I said that if we clear that barrier, I'll go higher. My next target, ideally, I like to see a test of that 38,000 mark, or sorry, 39,000 mark. I would really like to see that. So yes, if we can somehow get closer to that level, that would be really nice. And I'm talking about the futures here. But if it starts falling back below the 38,500 zone, yep, I will consider a bit of a retracement back to the downside here. Bashiro, morning, good morning. Yes, I have natural gas out there. There we go. Yes. I don't know if you're still interested in that, but anyway. Hey, yes, happy to see you here as well. S&P 500 very quickly. So this one drifted back to the downside. As I said yesterday, the S&P kind of ended up the session in the red slightly. Yeah, look, for now, I mean, from the technical perspective, if we've drifted lower and we stalled near this 4,933 zone, but I think that it was very good for the upside. Maybe for the downside, we need to examine something else. But now for the upside, what I'm going to do here is I'm going to keep an eye on that 4,957. If that gets cleared, wonderful. This will confirm a forthcoming higher high, potentially attracting more buyers into the game. In order to consider a move lower, now this is where I need to search for maybe a hurdle, something maybe like this 4,905 area-ish. Maybe this could work out. Bashiro, yes, you're waiting for more downside on natural gas. Okay, actually, I would like natural gas to go back up, you know, but yeah, hashtag no bias, right? But anyway, yes, I mean, we'll see. We'll see. Most likely, it's gonna still drift lower a little bit more. So coming back to the S&P, yes, I would like to see a drop somewhere below this 4,905 zone right here, just to be a little bit more on the safe side. And this way, a nice larger correction here to the downside could be possible. In terms of natural gas, NASDAQ, natural gas will be later. And NASDAQ, there we go, beautiful decline yesterday. Look, yesterday we got the earnings from big giants, and yes, Microsoft, Alphabet, AMD, all them showed kind of decent results, I would say, you know, yeah, still NASDAQ drifted lower. Maybe that was a little bit of profit taking because maybe people from, you know, actually, let me have a quick look at NVIDIA here. NVIDIA, yes, yesterday stalled a little bit. Netflix declined. MasterCard, no, yeah, was it Microsoft? Sorry, MasterCard coming out today, if I'm not mistaken. Yeah, MasterCard is coming out today. Microsoft, SFT, what happened yesterday? There we go. They all corrected lower. Okay, I think it was more of like a profit taking actually. So, and to be honest, I think that the market is worried about what could happen with the Fed, and that's why maybe people are taking their profits. So this is going to be interesting to see what's going to happen today during market open. Will we see a bit of a correction, a larger, just because people will start, you know, taking their profits before the Fed, and hope maybe expecting the indices to decline again? Nobody knows. Maybe they will skyrocket. Who knows? But I think that they will be quick to re-enter again. But you can take your profits, you know, and then you can maybe, let's say if it drops heavily to the downside, you can just enter again, buy, and then, you know, maybe you can take advantage of that. But again, nobody knows, you know, how it's going to react. So that's why I keep on saying all the time, wait for the event, don't rush into thing, and everything will be fine. So coming back to NASDAQ here, look, in general, I would say I'm leaning towards the downside if it would be a normal day. But because it's not a normal day, you know, that's why I am leaning kind of towards just staying around here and observing the price action. This Fibonacci extension, I think it's time to get rid of it as well, and we can just basically focus on this little range where we are currently sitting in between the 17,463 and 17,792 zone, and then we will go from there. So yes, basically another in terms of saying it differently, we need to see a clearance of the range, one of the sides of the range, in order to consider the next short-term directional move. And if we do clear the lower side and we stay below it comfortably, then yes, I will consider a larger correction here towards this upside line drawn from the low of the 4th of December. For the upside, a push over the 17,792 territory could do the trick for a few more buyers. DAX. DAX yesterday corrected back down a little bit. We're seeing the futures kind of trying to push back up, but this I would say if we would have a like a bit of a gap here, I would say between these candles, you know, let's say if we would have a this candle, today's candle, a little bit lower than, you know, than the tail, for example, of the yesterday's candle, then I would say it's a nice island reversal. But again, is that the case? Well, I wouldn't say yet, you know, that this is the case. In general, for me to start maybe considering a move back down, a drop back below this downside line, which we violated, by the way. And if you remember, I mentioned this before in my webinars, and if you have been watching my webinars, I said to you that there's a pattern, there's a tendency to revisit the broken trend line from the other side. And in this case, we could see a drift lower, maybe a test of this downside line or the upper side of the falling channel. And yes, maybe then we could rebound and push higher again. So, you know, let's not exclude this scenario. However, if we drop below the downside line, this one, then, well, this is where it could open the door towards some lower levels, guys. So yes, be careful, be cautious, and keep your eyes on the Fed today. In terms of, by the way, in terms of European data, we do have a few bits and pieces here. And yes, I'm looking at numbers right now here, and I can see that I've missed something that I forgot to mention. But okay, let me just talk about the European. We got the German, we're getting the German CPIs, the preliminary German CPIs today, so just be cautious and careful with that. Also, quite an eventful day today in terms of other economic data sets. So coming back a little bit backwards here to the US stuff. I mean, we get the ADP number, but actually I'll mention that when I'll pick up on the US dollar. But another thing I forgot to say is that, like, when I was talking about ASX 200, why this has been rallying so strongly is because we got the CPI numbers from Australia. There we go. Very important. The numbers there declined and they came out lower. So that's why we are seeing that strength in ASX 200 right here. And yes, that means that, you know, maybe it's kind of pushing the RBA towards having a rate cut, you know, because you don't need higher interest rates right now. So that's why we can go for a rate cut. And that's where, you know, the stock market here, the SX 200, is rallying nicely. Now, again, another piece of data which I forgot to mention was the Chinese composite, manufacturing, and non-manufacturing PMIs. So all of them came out higher than the previous numbers. That's in a way great. That's why we saw Chinese figures, kind of a Chinese index pushing back up a little bit because the numbers kind of were good. However, I think that they're still worried about the whole Evergrande situation, and you know that's so. Yeah, I forgot to mention these sets of data. I mean, this is quite important because, well, it is important because we need to understand like what's happening, and you know what's the situation here. So yes, but yeah, coming back to the FTSE 100 here, which I wanted to pick up on here. We're pushing higher. It seems like it wants to go further north. Well, I mean, okay. I mean, if it wants to go further north, that's fine. I mean, I'm fine with that. And let me just adjust this chart here. So we're clearing this 7,660 territory. Okay. So as long as we remain above that, then yes, I will continue targeting the 7,732 area, approximately around here. That's the high of the 8th of January. Good potential target. That's the kind of the highest point of that week when it started. So that's why I'm aiming for that hurdle. However, if we start somehow drop back and stay below the 7,660 territory right here, maybe a bit of a corrective move back down here could be possible. So let's keep an eye on that one. US dollar index. So as I said to you, I promised I'm gonna pick up on the US data. So today we get the ADP number. So some people like to, and I think I keep on saying this every month basically before the NFP comes out, because we get the ADP on Wednesday and the NFP is always on Friday. So I just wanted to say that, and I'll probably repeat myself again, that you don't try to gauge NFP with the ADP result. So ADP result, I mean, if it comes out higher at the moment, it's expected to come out lower than the previous number. But then don't think that, this is how NFP can come out. The correlation is already lost in there. So, sometimes it can happen, they can go together, but like end up being like close or doing the same. But most of the time is actually off a little bit. So that's why just keep an eye on the number, just wait for the result to happen. With the same as ADP, just like keep an eye on it. If it comes out let's say higher than the previous, okay, wonderful, great. I mean, we can take a look at, maybe there's going to be some positivity here, but somehow I doubt that the DXY will do something in general all the way up until the Fed today. So long story short, basically, I think that it might stay just somewhere around here for the time being. Maybe we'll get a spike. If, let's say, the number is better than the forecast, maybe we'll get a spike here, but then the body might drift back down below this 200-day EMA. So, yes, and maybe this way, we maybe this way, like I said, it could confuse the traders, and most likely it can do that. So anyway, long story short, for me to consider the upside here on this one, I need to see a strong move above this 200-day EMA, and then I'll target some higher levels. For the downside, I need to see a drop below this highlighted zone, below this 102.92 territory where the 50-day EMA is, and then, yeah, we could just take it from there. Gold. Yesterday, gold was wow. I mean, looking at this picture here, look, gold did push above my barrier, this 2038 zone. We cleared it. We traveled nicely to the upside, but then at the end of the day, we still remained below it. Maybe because the US dollar started recovering again. And yes, gold drifted back down, but still remained above my downside line. So in other words, it broke the downside line. It stayed above it. So great. That's the first step towards aiming higher. Then it flirted with the 2038 zone, cleared it, went higher, and then boom, drifted back heavily to the downside, but still remained above the downside line. Now it's trying again to overcome the 2038 zone. Look, I'm not rushing into things yet. Now at this point, I have to see that move above this 2038 zone. I'm already seeing it, but can we stay above that territory? If we can, great, I will go higher. For the downside, I would need to see a drop below the crossroads of these two trend lines, or mainly this upside line drawn from the low of the 17th of January, which, don't get me wrong, this line is a little bit on the tentative side, but I need something here. So, or you could start already looking at some lower levels if we do fall back below the 50-day EMA, which on my chart is roughly around the 2026 territory. And then we'll go from there. Silver, so far so good. So still trading above this upside line. So as long as we remain above that upside line, yes, there is a chance for this one to move higher. However, I think that I prefer to wait for a push above all the EMAs here, because those are providing fantastic resistance in order to go higher. For the downside, yes, a break of this upside line is required, and then we'll just take it from there. Oil. It's stalling. It's not doing much, and yeah, I'm not gonna really actually do much with this as well, because as I said to you, I'm not really getting quite bullish on this one yet, because overall, if you look at this picture, I mean, look at this. Since peaking in March of 2022, it's on a decline. It's on decline. It's drifting lower. Let me just put this way. It's on decline, is drifting lower. Maybe actually this could be drawn this way to capture. Yep, I think this is much better. So in a way, maybe we could see a push higher here at some point, up all the way up until this downside line, drawn from the highest point of March of 2022. And then yes, if it holds, another decline could be possible. So look, I'm not excluding although I'm not very, let's say, positive on this one, on the price of oil, I'm not really excluding the upside scenario, because there still could be a push. But at this point, I will just be a little bit more excited with the upside if we do make a move above this barrier right here. Let me just put it here above this 79.29 zone right here. If we can get that move, great. I will go higher. Because this will confirm a forthcoming higher high. For the downside, a drop somewhere maybe below this territory could do the trick. The 76.18. We'll see how that plays out. Yeah, I mean, probably somewhere around this territory, the 76 zone in general. I think if we fall below that, then yes, I'll consider a move lower. My other little concern here with the downside, actually, maybe I should look at it from this perspective. This one right here, this upside line. If we get a break of this one, then yes, maybe there could be some more downside. But again, there's quite a decent area to fill, so why not to just try to capture maybe this zone right there. But we'll see. We'll see which way this one's going to clear out. And again, maybe the Fed will help just because it will be a strong reaction in the US dollar, and this will affect the price of oil as well. Natural gas. Again, something that we're watching as well today, because natural gas is denominated in US dollars, and I mean, if the US dollar shoots strongly to the upside, well, guess what? We could see maybe a retest of this lowest point of 2023. Could be the case. I mean, maybe we could even create a lower low. Who knows? But at the moment, yes, I mean, everything's leaning towards the downside. In general, of course, yeah, it would be very nice to see if we can see a strong push higher here. But, you know, I don't want to rush into things yet. So I want to see what's going to happen here. And if we can get a nice clearance of this area right here. I mean, if we can climb back above the 2.23 zone somewhere around here, yes, maybe I'm going to consider a move higher. But again, depending on how we're going to play in relation to this downside line. For now, the downside scenario, yes, is the main one that I'm watching. And yes, we are near that psychological 2 level. So, okay. Slightly below, we have the 1.95 zone. But if that gets cleared, well, guess what? Maybe we could start aiming for that 1.90 or maybe 1.85. Let's see. Bitcoin. Bitcoin is stalling. So, yes, again, the same story. I think, like, keep your eyes on the Fed. Sorry, I had to warm up my throat. It's a little bit chilly here, but yeah. Anyway, so coming back to the, like I said, to Bitcoin, we're stalling near that 23.6, which we've, tested previously, and look how well it's playing out so far. So that's great. That's good. Let's keep it this way, but for now, I am waiting to see if we can get a nice pop above this 44 territory, 44,000 mark, and then yes, I will go higher. At the moment, there is a chance for a retracement back down. I would really like to see that. Let's wait and see. BitcoinCash is similar. Now, this is where I'm not rushing with like the upside on any crypto yet, because I see Bitcoin. Yes, Bitcoin, because the whole Bitcoin ETF, and there are reports that there's a lot of Bitcoins under management now, and on BlackRock ETF, this one, and yeah, there's a lot of positivity and stuff like that, but other cryptos are not showing strength. And okay, BitcoinCash, for example, yes, still kind of flat, I would say. So in order for me to go higher, I think I need to see a clearance of the upper side of this range, where it's not a very nice range, good looking range here. Maybe on a weekly it looks better here. I think yes, on the weekly looks better. So basically I need to see a clearance of the upper side of this range in order to go higher. For the downside, I need to see, well, for the downside, I talked about this previously. I said as long as we remain below this 245 territory, I will consider a move towards the lower side of the range. If we push above this barrier, then yes, above this territory, this 245, then yes, great. I'll consider a move towards the upper side of the range. Ethereum is gaining a little bit of support, so it's finding, yes, those buyers, just because on the speculation that, hey, maybe Ethereum ETF could be next. It could be next. But again, let's not rush into things. I mean, maybe this could... we broke the downside line, so in a way, from the technical perspective, I have to say, yes, I am leaning a little bit more to the upside. So especially as long as we remain above the 50-day EMA. So then I'll target the 2,407 or ideally the 2,450 zone. For the downside, I would like to see a drop back below the 50-day EMA here, and then yes, we could just go from there. Litecoin very quickly on that one. So yes, we're stuck here still. So I'm watching this triangle overall. I need to see a clearance of the lower side in order to go lower. I need to see a push. Well, I need to see a push above these EMAs, at least the 50-day EMA, in order to consider a move towards the upper side of this triangle pattern. AUDUSD jumping into Forex. So yesterday we cleared this downside line. We pushed higher, but we failed to stay above it. And now we're seeing a drift lower. So is this enough for the right shoulder? Because maybe this is the neckline. So maybe this is the left shoulder. This is the head. And maybe this is the right shoulder. So that means maybe this is a head and shoulders pattern. But either way, doesn't matter. For me, to be honest, it really doesn't matter. I need to see a drop below this territory, below the 0.6525 territory, somewhere around here, because maybe that's the neckline. If it is the neckline, okay, it doesn't matter. For me, this is the point from where it will confirm a forthcoming lower low. And this way, I'm going to aim for that 0.645250 zone, approximately around here, and then I'll be happy. But again, while we remain in this territory, I'm just observing the price action. For the upside, again, I need to see a push back above this downside line, back above the 100 and 200-day EMAs, and then we'll take it from there. AUDJPY, there we go, continues to resist of going higher because of this downside line. But it drifted lower and it tested my 50-day EMA. I talked about this yesterday and before yesterday. I said that if we do drop and stay below that 50-day EMA, then yes, I will get a little bit more excited with the downside. Well, we did get a drop, but we failed to stay below it. So I need to see the body of the daily candle staying below it in order to go lower. Simple as that. This is the same analysis is valid. NZDJPY. Let's have a look at that one. Oh, this is beautiful because it's coiling up. So waiting for that breakout through one of the sides here. CHFJPY, still the same game plan. I'm going through these very quickly just because I already mentioned those before, and I just want to say that it's the same analysis, basically the same valid story. So I'm watching this barrier, this 171.50. In order for me to go higher, I need to see a break of that territory. For the downside, I need to see a break of this upside line. At least then I will slowly aim for some lower levels. I mean, we do have obstacles on the way down here, but I'll consider those. But first, we need to see a break of this little short-term upside line drawn from the low of the 9th of January. USDJPY is also an interesting one because we are kind of, I want to say we're forming a bullish flag, maybe weekly. No, but not really. I mean, this is just stalling here. Maybe it's a little pause before, another push higher. So that could be the case. But I need that pop of the 148.80 zone right here, and then yeah, we could take it from there. So yes, long story short, that's what I need to see here in order to go higher. USDCAD, this one's a mess. And look, today we also get some Canadian numbers as well. And let me just double check and refresh my memory. The preliminary GDP number, yes. So the final number for November, but the preliminary GDP number for December. Let's see how that's going to come out. At the moment, there is a slight improvement for the November number. Let's see if that happens. But I think that my 1.3415 level, it was working out initially, but then it stopped. Now it stopped working. So I think I need to search maybe for something else. But look, you know what? Actually, no. I'm going to keep an eye on it. I'm going to stick with it. This one I really like. And if we do drop and stay below the 1.3415 territory, yes, I'm leaning towards the 1.3340, and then I'll take it from there. For the upside, a break of this downside line is needed because at the same time, we could climb above the all my EMAs here on the daily chart. GBPUSD, something that I haven't looked for quite a while, but or did I? But anyway, 1.92. Yeah, I know I did look at it. Sorry, what am I talking about? Yes, I did look at it. EURAUD, look, with the abundance of news coming out this week from Australia, this one is actually an interesting one to trade as well, because we're we're stalling here. We could be forming something off a range, so the prevailing trend was to the upside, so maybe there is a good chance of this one breaking to the upside here. But again, initially, I need to see a pop-up of the 1.9342, 45 area, something like that here. In order to get a little bit more comfortable with the upside. For the downside, a drop below the 1.9209 area would be ideal. And this is what kind of almost happened here yesterday. We almost stayed below it, but we failed to stay below it. So yeah, we're pushing back up. So maybe the bulls are not going to give up on this one and push this one further north. GBPUSD. So yes, we're falling below that 1.2690 territory, but again, due to the eventful day today, I would say maybe at this point that doesn't matter. Maybe at this point we'll have to just wait and see what's happening here. But you know what? I'll take a very conservative approach, and I'll probably wait for a drop below the lower side of the range here in order to consider a move to the downside. For the upside, I would, in the short run, I would like to see a push above this downside line. I like it still, and I think that it might open the door towards some higher levels if we do get a nice pop above it and stay above it. And yes, then I'll target the upper side of the range. EURGBP, a roller coaster ride. Yesterday we saw a push higher. Great, wonderful. We cleared the downside line, but we failed to stay above it. And we also cleared the 0.8560 territory, the one that I talked about. So I need to see a push above that area in order to go further north. Well, I'm not really getting that yet. So, hey, once I get that, I'll go higher. But at the moment, there's a chance for this one to drift a little further south. Let's see if that happens, but for that, we need to see a drop somewhere below this 0.8523 territory right here. EURAUD is something that I haven't looked for quite a while. Now, this one I haven't looked for quite a while, and actually, I like it to the upside. Why? Because this, for me, let me just recycle one of these lines here. This, for me, looks quite interesting. This is a downside line, but at the same time, maybe we're actually in the falling channel. Let me just double check this. Yeah, roughly right here. So maybe actually should be something like this. So then we get rid of this, then we draw it this way. So yeah, this way, basically this is more like it. So we're in a falling channel. We could continue drifting lower while we remain inside the falling channel. But we have to remember that the prevailing trend was to the upside. So maybe this is just a little pause before another push higher. But again, a breakthrough the upper side of the falling channel is needed in order to go to the upside. So long story short, if you're looking for some higher levels, wait for that breakout. But do not try to do anything yet, because the theory still goes that while we remain in the pattern, we could still go in the direction of that pattern. And that means to the downside. And finally, EURUSD. So this one's drifting lower, so that's absolutely fine. Everything's in line with technical analysis. But again, as I said, just because it's a different day, we will get some dollar news, dollar volatility because of the Fed. So yes, keep your eyes on that. And this, of course, could affect EURUSD. At the moment, if everything would stay the same, I would say I'm bearish, because we're breaking below the 200-day EMA and we're currently staying below it. So I'm bearish on that one, and we could end up testing this upside support line drawn from the low of the 3rd of October. And yes, then we'll just kind of take it from there. But at the moment, I am cautiously bearish. At the moment, I'm leaning towards the downside. However, I'm not going to be surprised if the pair just stays somewhere around the 200-day EMA up until the Fed comes out, and then yes, we could see some crazy action. And at this point, I would say I will leave it. I will let it settle, and just, I'll take it. I'll try to, do something about it after the event, after I see that the market has settled down a little bit. So, because at this point, it's very difficult to predict what exactly will happen. So just be careful, guys. I mean, and we'll pick up on this, tomorrow, of course, because I'll have to wrap it up here right now. Thank you very much, guys, for tuning in and watching this one till the end. I really appreciate that. Thank you, everybody who's commenting, who's putting the rocket ships out there. I really appreciate that. So you can't even imagine how much it helps. So you just maybe messaging, or saying good morning, or writing where you're from, that's actually really helpful, because it helps me to continue to run this, because at least it doesn't mean that I'm talking just to myself, but yeah, thank you very much, guys, really appreciate that. So join me tomorrow, 7 o'clock GMT time, as always. We'll pick up on the aftermath of the Fed. We'll see what scenarios worked out nicely, which didn't. But yeah, Tom of Finland, thank you. So yes, we'll pick up on that, and yeah, I hope you'll have a fantastic trading session today. Stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. Thank you very much, and I'll see you tomorrow. Bye-bye. If you want to continue to please the trading gods, subscribe to our channel for a blessing.